right, ladies and gentlemen, welcome back. Good afternoon, and welcome back to the session. This is the Thursday trading room, more like a Thursday market update. All right, welcome back, everyone. If you're joining us for the first time, please do subscribe to the channel, and remember, all the information discussed in this session should not be construed as advice. All right. So let's get right into it, guys. It is a Thursday. We are approaching the end of the week. Before we look at the charts, remember you can open an account with us on tdmarkets.com. All right. That is our website, tdmarkets.com. Just take a look at the account types we have on offer. All right. And if you're ready, click on client, register as a new client right there. Click on register as a new client, and then you will be given all the information. The links are going to be on the chat shortly, but this is basically a simple process that you would do to open up an account. All right. If you get stuck anywhere and you need some assistance, you can always send us an email on the email address provided, or you can give us a call on the number that's provided on the chat. All right. Simple process. Everything will be given to you via email, via phone call, and you need not to worry. All right. So that is tdmarkets.com. We also have our education. All right. We also have the TD Markets education, which is a trading education that you can access once you have an account. So you first need an account, get it verified, have a bit of funds in the account, or have some funds in the account so that you can qualify for our education. All right. The schedule will be provided to you via email, all the links and everything that you need. All right. So there we go, guys. Just get the formalities out of the way. All right. So this is where we are right now. Let me just have a look at the chat and see if everybody's in. The Slow Pokes will be joining us shortly. I believe this is the last day of the current month. Yeah. 30th, last day of the month. So let's see what we can get for the month of May, right? For the month of May. I can see you guys there on the chat. Oil market, please. We'll have a look at the oil market. We'll definitely have a look at the oil market. All right. Okay, cool. I think we're ready. Botswana is in the house as well. That's beautiful. All right. So, ladies and gentlemen, let's get right into it. Just a bit of updates fundamentally. All right. The situation in the Middle East has not changed. In fact, today's reports hint or indicate on a possible military action from the US to Iran. All right. So the situation has not changed. It is what we know it is. But today's reports hint at the US taking military action on Iran, right? That is point number one. Point number two, negotiations have not taken place. The US and the Iran are going back and forth with their proposal. Obviously, the US wants Iran to abandon all nuclear activity, all nuclear weaponry or weapons, all right? But Iran has its own, proposal as well. So they're busy going back and forth with these proposals. So as a result, that has stalled the peace talks, all right? Up until when, we're not sure. We're just going to keep an update on the news, all right? And then the biggest thing I saw, which is point number 3, is that I'm not sure how true this is, guys, and maybe you guys will also do your own research. I'm not sure how true this is, that Russia is now in bed with Iran. I'm not sure how true this is, right? So I'm going to use the word allegedly. So I've seen some tweets that suggests that now Russia is in bed with Iran. And as a result, Russia is also warning the US not to proceed with a military action against Iran. Right. So please, guys, don't quote me on this. I'm not sure how true this is. I'm going to use the word allegedly, right? I mean, this is on record. The recording is there. So if you quote me and it's not true, the recordings are there, all right? So yeah, so that's what I saw. And if this is true, I mean, I've been saying that, and this is my humble opinion. I've been saying that Iran is winning this war, right? The people I've been in conversations with, I've been telling them, hey, look, I honestly think, just my humble opinion, that Iran is busy winning this war. And obviously, it is not in plain sight. Why? Because it is the US that's always in our faces, right? The US president is always in our faces. There's always reports and the spotlight on the US, but not Iran. But Iran are quietly going about their business. They are quietly going about their business. All right. All right. So now, let's see what Russia will do. But they are warning the US not to proceed with any military action. So let's see what is going to happen. It's going to be interesting. All right. So yeah. So for now, what I would say is that's just the update. All right. But everything we know remains the same. All right. There's no peace talks at the moment, and so I think the markets are going to stay the way they are. All right. And then last night, FOMC meeting, right? The US announced their interest rates, and in line with market forecast, they've kept their rates in the range of 3.5% to 3.75%. All right. They've kept it in that range. I mean, this was in line with market forecast, market expectation. So this was not there were no any surprises to that, right? So the markets never really reacted to the interest rates. Why? Because the market's already priced in a rate pause, right? You see now, one of the questions we get is that how does interest rates affect the market, right? There is the normal reaction as per the book or by book, right? However, sometimes it might not be that way, right? So if the market's already priced in a rate pause or a rate cut or a rate hike 4 weeks before the initial announcement, the markets would move prior to the initial announcement, right? So say for instance, since the last meeting, the markets had already priced in a rate pause. So what does the market do? The fact that they are pricing in that thing, that means there are going to be reactions and movements even before the announcement. And most of the times you will find that when the announcement happens, the market is not moving. Why? Because it has already moved, right? Because they've priced in. So that is what we're seeing right now. If you anticipated the market to give us reaction, volatility upon the announcement, and that never happened, it is because of that. The market's already moved, all right? But 2026 has already penciled in a rate cut later on this year. What was big about this one is that the current Fed chair, that is what traders were paying close attention to. The current Fed chair, Jerome Powell, all right? Obviously, what's this? Sorry guys, I just keep getting distracted here. Let me just do this. Just 1 second. There you go. Brilliant. All right. So back to my point. The current Fed chair, this was his last meeting. There's going to be a new Fed chair on the next meeting scheduled in June. All right. So the markets were paying close attention to that specifically, and his tone on inflation, his tone on the leadership handover to the new Fed chair. So now that's what markets are watching. Whether rates will be cut the next meeting, I don't think that's important at the moment. But what's important is what's going to happen from last night up until the next FOMC meeting. All the events that are going to take place as a result of the new Fed chair is what would potentially cause volatility. What will potentially cause volatility. So that's what the markets are looking at. So interest rates, next FOMC meeting, the market's already pricing in a pause. So yeah, so I don't think there's gonna be anything significant unless the new Fed chair changes things. All right, but we are still yet to see that. All right, so those are the fundamentals, guys. Right? Yeah, Middle East, nothing is happening there. Right? So let me have a look at the chart. So we will go to the oil market. We'll have a look at the oil market. How did you know that they will keep the rates unchanged? Yeah, no, look, it is because of the previous meeting. All right, because of the previous meeting, and not only that, but a lot of things. So this one here, right? This one here, it is because of the reason, one of the reasons why they kept rates unchanged is because of what's happening in the Middle East, right? The Middle East uncertainty or geopolitical uncertainty, the elevated oil prices also, right? That is pressurizing inflation to go up. Inflation has been going up. So these are some of the factors, major factors, right? Major factors that contributed to the rates not hike or not cut, but pause. All right. And also what happens is the Fed always hints on these things, right? The press conference, 30 minutes after they announce interest rates, there is the press conference. So during the press conference, the chairperson always hints at these things. So if you listen in and if you closely listen into his comments and the questions, because during the press conference, there are journalists there who are asking questions. So there are a lot of hints here and there. So if you pay attention to those hints, then you will know that, hey, look, I don't think they're looking at a possible cut or hike. I think they're going to maintain the federal fund rate or rate fund maybe for the next two meetings, right? So it's these things, right, that will help you understand whether they're going to, what is the outcome of the FOMC. Right. So the next one, the hints are that they're not gonna hike, they're not gonna cut, they are gonna maintain. Right. Another thing is this, the target, and it also goes with the target. Right. So each and every central bank has its own mandate. Each and every central bank. You look at the Reserve Bank of New Zealand, Reserve Bank of Australia, the South African Reserve Bank, right, and all the central banks. They always have their own mandate. So the US Fed's mandate, they've got a dual mandate, right? A dual mandate of maximum employment and price stability, right? Which means with price stability, which means they want inflation to go down to 2%. So that's their target, inflation go down to 2%. So then what do? They use other economic indicators to manage interest rates, all right? So interest rates has been dropping as a result of inflation dropping. But when inflation was going up or when inflation was high, they were hiking interest rates. So by the book, it's a norm for central banks to hike interest rates when inflation is high. But when inflation is stable, then either they cut interest rates or they pause interest rates, right? So going back to the Fed, the yearly interest rates in the US is sitting at around, I think 3.2%, 3.3%, somewhere around those figures. It jumped from 2.4% to 3.3% or 3.2. I'll just have to verify exactly which number it is. And so what then do they do, right? They don't necessarily hike interest rates. They just maintain the current interest rates because they are data dependent, right? And also because of their stance, monetary policy stance, they would hike interest rates. They would pause interest rates. But let's say now in an event where something happens and then all of a sudden inflation pushes up in the US, goes to extreme levels like your 6%, 7%, right? You know, those COVID levels. Then they would look to manage by doing what? By hiking interest rates, because their inflation target is 2%. So they want 2% to go down, or they want inflation to go down to 2%. All right. So those are some of the things that would give an idea of whether the central bank is going to hike, is going to pause, is going to cut. So those are the things, all right? And these are things that you speak about. I mean, Ashley also speaks about these things whenever he's hosting a trading room. I also speak about that. So yeah, so with time, it will make sense, definitely. It will make sense. Yeah, so I hope that answers your question. So on that note, let's start with the oil market. Let's start with the oil market, right? Let's do a bit of update. So oil has been aggressively pushing up as indicated on the last session. So we're going to start with Brent crude, right? UK oil, followed by US oil. All right. Look, oil right now is heavily reliant. Okay, let me not use the word reliant, right? But the oil market is very sensitive to the Middle East tension, war, whatever you want to call it. Is very sensitive to that. So now things have not changed, right? The oil market has been pushing up because there has been no peace talks, and there's been promises, in a lack of a better word, promises of military actions against one another. So the US is also responding to what Iran is saying. Iran is responding to what the US is saying, and they respond via military action, right? So the Strait of Hormuz is still being blockaded or blocked, right? No ships are passing, or very limited amount of ships are passing. So that is basically a summary of what's been happening. Consequently, the oil market is pushing towards the upside, right? So looking at the chart right now, we are yet to reach this high, right? That is 115. We have to reach 115. So the next target we have on oil is 115. That is the next target, right? If the market breaks this 115, then we look at a new target. But for now, 115 is our next target on oil. The trend is still bullish, right? The trend is still bullish. All we're looking for now is a continuation of this, right? It's a continuation of this towards the upside. That's basically it. So at the moment, it's correcting. It's correcting at the moment, looking for a continuation of that. So that is the UK oil, right? So 115 is our target. And then US oil, we're looking at 114 as our target, right? So with US oil, it might not, well, it could, but it might not go all the way to 114 because we have this possibility here, right? Look at this possibility. So you see where it is right now. It is back at the top, all right? So it hit 107.7, and then right now it's pushing down. So with this one, we're still anticipating one more push towards the upside. So with this correction, we would be looking for a correction and a continuation back. So with US oil, the target that we have here is 108, right? 108, that's our target. If it breaks 108, we're looking at 114. All right. So yeah, so the oil market hasn't really changed. Brent crude, 115 is our target. WTI or US oil, 108 is our target. And after that, 114 is our target. All right. So that's how oil is looking. I want to go to the commodities. There and see what the commodities are doing. All right. So we've been talking about gold. And my stance on gold is that I'm waiting for gold to push up. So my stance on gold is that I'm looking for it to push towards the upside. All right. So this morning, or today, gold has been very bullish today. It has been very bullish today. You see what happened. This is basically what's been happening today, right? Very bullish. So now going back to the analysis, all right, we said that we're going to keep a very close eye on this low here, right? There's a possibility, according to the last session we had, I told you guys there's a possibility that gold is going to come back to this low here. And then from this low, we're anticipating some sort of a reaction. So that's where the market or that's where the market was this morning. That's where the market pushed up from, right? So now with this price action now, right? A break of this channel, right? We'll be looking for one more push towards the upside. So if the channel breaks, we'll be looking for one more push back to around this area, these territories here. These territories, right? This was the previous resistance we had there. So I would look for this possibility if it breaks, right? Provided that it does not break this area here, right? So if it respects that area, it continues to push up. I'm looking for a break outside this descending channel, and then any setup I come across, I'll be interested in this move. For now, just back to these areas for now. But you guys know that my all-time target, or my overall target, is on this resistance, right? So any movement towards the upside, right? This is where my target is, on this resistance, right? We can never ignore this resistance. If it breaks that resistance, we have the previous all-time high that price could go to. So it's gonna be this one. So if it breaks this, then it has the potential to go back to all-time highs. It has the potential. So the approach here would be to take it 1 week at a time, 1 day at a time, one price action at a time, meaning you're just gonna, just follow it and see how far it can get, or it can go. All right. But that is what I'm looking for on gold. Now, obviously, there's still geopolitical uncertainty, geopolitical tension. If it happens that gold does not do this, right, and then it goes down, I would simply reanalyze to see if there's a possibility that gold may visit this low again. If there's a possibility, right? Yeah. So if gold was to go down and it doesn't give us these here, I would reanalyze and see if this move, it gives us the possibilities of gold visiting this low again, because from this low I'm gonna be looking for this again, right? From these lows I'll be looking for this again. All right, so right now we are waiting to see what's gonna happen there. Are we gonna break this? Is it gonna go back to this zone? And then we'll just have to wait and see. All right, so gold hasn't changed. So the oil market, commodities remain the same. All right. So let me look at the chat. Let's see what you guys have. Have just closed position on myself, looking at the day. GBP Swiss broke. So any movement towards the downside of GBP Swiss, I would anticipate them to go and retest. Oh, okay. Now it's past that. So what I was talking about is when it broke here, right? So what I meant was any move towards the downside for me would be to go back and retest this area here. All right. But I can see that it passed this area. So how would I approach GBP Swiss? Because it is still, the weekly structure is still very much bearish. Right? How would one approach this? I mean, it will depend, right? It will depend whether you follow the structure or you follow the structures on the lower time frame. So if you follow the structure where the market is right now, it is an area where we could get an opportunity, right? I'm currently on the weekly time frame. And on the weekly time frame, we can see the current weekly candle is suggesting that there is a lot of selling that's happening here, right? So which is good. Now look at where this selling is happening. It's happening on this area. In fact, let me do this. Let's have this zone as a resistance zone, right? Let's remove this one, right? So where GBP Swiss is right now, it is giving us an indication that sellers are interested, but look at where everything is forming on the resistance. So that will be a good area for one to start looking for shorts. All right. So yeah, just a continuation of this towards the downside there, right? So I would I would wait for this weekly candle to close first. And if I'm looking for sales, I would want this candle to close the way it is right now. This week is very important, right? So I would want the weekly candle to close, and I would want it to close like this for me to continue looking for sales. To continue looking for sales. All right. Yeah. Yeah, right. And then that means there's a possibility that we're going to continue towards the downside, definitely. So I think it's a really good setup that's forming here. Direction clear. We've got some falling wedge situation happening here. So because of the falling wedge, one would look for this, right? One would look for this. Yeah. So I think this setup is a good one, right? It's a potentially good setup. So that is pound Swiss, all right. Nasdaq is just in no man's land. Yeah, Nasdaq is just going up, like we said the last time, right? So yeah, so Nasdaq went back to this top and it's just going up. So Nasdaq remains bullish, right? Nothing on that one, is just bullish. It keeps giving us corrections, continuation. Yeah, so this one is still bullish. It is still bullish. All right, so the next time there's a correction, anticipating continuation, correction, continuation. So this one hasn't changed. I think between Nasdaq and US30 is a better setup than Nasdaq. Between US30 and Nasdaq, for me personally, US30 is a better setup than Nasdaq. Why? Because this is the previous all-time high, right? This is the all-time high. This all-time high is attracting price right now. It's attracting price right now, right? And if you take a look at your 4-hour or 8-hour time frame, we've got a higher low that's forming. We've got a continuation pattern that's forming, right? So everything is it just makes sense, right? From a technical standpoint, this is what we call confluence now. So the all-time high is attracting price, so meaning that there's a higher probability that price is going to go up. And on top of that, look at how we have this continuation pattern. So this just screams one thing. It screams bullish, right? To go there. This one is clear. So for me, Nasdaq is trading in the wilderness at the moment, right? Trading at the wilderness. It broke the previous all-time high, trading in the wilderness. But US30, I'm for US30 than Nasdaq. I'm definitely for US30 than Nasdaq. All right. So that is how it's looking. So Euro USD, it has now gone back to retest this area, right? It has now gone back to retest this area. So from there on, looking for a continuation up. So with Euro USD, I'm looking for a higher low. I'm looking for a higher low to form, which could potentially form on this support, right? On the support right here, right? I'm anticipating it to form on the support right here. And then from there, for price just to continue pushing up. Once we get a higher low, we are going back to this top. So right now, it is just correcting at the moment. It is just correcting. So just waiting for the higher low and waiting for continuation up. All right. So that's how Euro USD is looking. German 30 still the same. German 30 still the same. Nothing has changed. Still the same. Nothing has changed. There we go. German 30 has been correcting. All right. And now it seems like it is beginning to form a higher low. It is beginning to form a higher low there, a continuation to the upside. So German 30 is just a matter of time before this breaks and goes back to this top. So nothing has changed on this one. Yeah, it's just a matter of time before this breaks to go back to the top. Euro AUD. Euro AUD, it still needs to go down one more time, right? It's not done as yet, so it still needs to go down one more time. So Euro AUD still needs to complete this current impulse. Just a few pips left, but it still needs to complete this current impulse and go back down to this low. This is just a continuation down. It's a continuation down. So yeah, so it's not done as yet. This is the trend here. This is the trend one would follow. That is the trend one would follow. Yeah, so for as long as the trend creates these corrections, it's going to continue pushing down, right? Break, go down, break, go down. So right now here, right, it's trying to create the correction. This correction might do this, right? It might do this one more time before it does this. It might just do this, but the break one more time towards the downside. So you see what happened here. It might happen again. It might happen again here, but it won't change the direction. The direction will still be bearish. It won't change the direction. So yeah, so Euro AUD, this current move is not done, it's not complete. It needs a push back down to this low. And then if you look at EuroCAD, EuroCAD is a little bit confusing now. It's a little bit unclear, confusing. Where is it? Yeah, EuroCAD is a little bit clear now or unclear now. So I was not anticipating price to break this, right? I was anticipating price to bounce and then go up, right? So this didn't happen. You see that it didn't happen. Price just went all the way towards the downside. So for me personally, it's a little bit unclear. It's not clear as to what it's trying to do, right? What it's trying to do. But for some short-term movements, what I would look for here, since it broke this, right? This is still a resistance. Since it broke this, I would anticipate price to go back and retest this area. I would anticipate price to go back and retest this area. And then from there on, it's either it's gonna go up or it's gonna go down, right? Either it's gonna bounce and go down, or it will break and go up. So for some short-term movements on this one, this is what I would anticipate. Whatever price does here to end up going back to this area. Right? Whatever price does, even if it creates one more low, just to go back there. So we'll have to see what's going to happen. Right? We will have to see what's going to happen. Yeah, so this one, just going to give it a few more days for it just to develop what it's trying to do. Let's see, and then we've got Bitcoin. All right, so Bitcoin is still going down. All right, nothing has changed on this one. All right, Bitcoin is still going down. It has reached the top and now it's been going down. All right, there's a possibility with how Bitcoin is going down, there's a possibility it may visit this top again. The possibility is there, right? With how it's going down, it's not going down as aggressive. There is a lot of pullbacks in this move, right? So short term, what I would say is this: short term, right? Let me just see what the daily is doing. Yeah, short term, what I would say is we have this low that formed, all right? We've got this low that formed, so we'd be looking for a continuation back to this low, short term. And then from there on, we'll see what's going to happen. But we've got a lower low, just waiting for a lower high, and then a continuation back down from the lower high, right? It might just try and retest. It might try and retest this resistance one more time. It might, right? But whatever happens, we get a lower high, anticipating one more push back down to this low, back down to that low. All right. So that is how Bitcoin is looking. In fact, it is trading within this channel here. All right. So a continuation back down. So that's how Bitcoin is looking. That's how Bitcoin is looking. All right. So let's see what else we can have a look at. US 30, definitely we spoke about US 30 up. Now, if you look at NASDAQ and S&P 500, they are trading above the all-time high, right? This is S&P 500. This was the all-time high that formed here. So they are both trading above the all-time high, right? Which it could do just about anything it wants to do, right? So that's why I'm saying it's in the wilderness, because it has already completed this impulse by going back. So what's happening right now is obviously it's a continuation of the impulse. So anything can happen around the zone, right? At the moment, the current structure at the moment is bullish, but anything can happen. And what do I mean by anything can happen? Apart from the corrections, it could do this, it could do that. So that's what I mean by anything can happen. It is very much bullish, but this is the possibilities we're getting. Now, if you look at US 30, you see now with the price action we see on US 30, this price action does not give us these two possibilities. It does not give us this. The only possibility it gives us here is this. Now, do you see the difference? Look, this, it doesn't give us these two possibilities because of where it is, what it's doing right now, the levels it's trading, and where it could potentially go, right? It's giving us this possibility. Only this, meaning there's a higher probability chance that it's going to go back. But if you look at where S&P 500 is, where NASDAQ is, it's giving us these two possibilities, because where is this going? So the next question would be, it broke the previous all-time high. Where is this going? You see how we don't have any reference to use, right? You can even go to the monthly time frame. This is the all-time high. That's the all-time high where it is right now. So yes, it could still continue going up. I take nothing away from that. It could still continue going up. But now, it's a little bit simpler if price has reached a previous level before, and because of that, it could easily go, right? So what I mean is, the market always visits the price it went to before, right? So if the market has bounced from this price, the market will always visit that low, right? If the market has created a high, the market will always visit that high. But now, if there is nothing on the left and the market is still going up, where is it going to? That is the thing. So I always say that if price is like this, it is trading in no man's land, in the wilderness, because it can either go up or it can reverse and go down, right? My reason for being bullish on gold, one of my reasons for being bullish on gold is that this is the price gold has reached before, right? This is the all-time high. Now, I'm going with the concept of price can still go back to that high. What the market did before, it can still do again. So that's why I'm always looking for these movements on gold. Even if gold gives us a low again, I'm still looking for this move. Why? Because it has reacted to that level. It can still go back to that level. So it is not trading in no man's land. It is not in no man's land. It's just there, right? So, but if you look at NASDAQ, where is it going? For me, it's a problem. You look at German 30. German 30, at least for me, is a solid setup, right? Why? Because it is going back to where it's coming from. It's going back to where it's coming from. There we go, right? And obviously, another layer to this is that it has been bullish. So we can also use the fact that it has been bullish. All right, it has been bullish. So it's going back. But if German 30 was to break, and go up, right? And then there is no price on the left, there's no price ever that German 30 has reached before, right? Then for me, it would not be a setup I would look at. For me, it wouldn't be a chart I would look at. You see that? So yeah, so looking at S&P 500, I wouldn't look at this one. Even if it can go up, it's fine, right? I mean, you can still capitalize on these movements. It's okay. But for me personally, it wouldn't be something I would keep an eye on, right? Unless it repeats something like this, right? Where at some point it corrects, then I would say, okay, this thing has the potential to continue up, unless it does this, because this would be a continuation. It would be a cycle. It would be a continuation. Let's see how it is. So yeah, so this is what we have at the moment. All right. I think I've gone over most of the charts you guys requested on the chat. All right. And yeah, so let's see what's going to happen, guys. As you guys can see, I'm not doing anything different. We have already analyzed this direction. I've just shown you now. I'm not doing anything different. We just follow the move. We just update the move. We see if there's any changes. But for now, there are no changes as yet. So we stick to the same script. No changes as yet. All right. And yeah, if you caught these movements, congratulations. Continue growing and let's grow together. All right. So fundamentals remain the same unless something changes outside. Not outside, but unless something changes tomorrow. Remember, I told you guys that I'm not sure how true this is, that Russia is starting to support Iran. Right? I'm not sure how true that is, but I think in the coming days, we will get proper clarity on that. I'm not sure how true that is, all right? But if that is the case, then we're likely going to see some strong movement as a result of whatever is going to happen with that, right? So yeah, so for today, guys, the trading room market analysis, that's what we have for you, all right? Continue looking at your charts, and yeah, we will come back again next week. Do join us again next week. Please subscribe to the channel, like, share, and yeah, all of that. And this is where we're going to end it, guys. Thank you so much for joining us. It's been a good session. Enjoy the rest of your week. Good luck. Take care. Stay warm. And we will catch you guys again next time. Cheers, everyone.